at your Light FM.
In the kitchen.
Not that one. We're going to do this one there.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
So there, maybe I should have stuck with the fruitcakes theme. That sometimes fits very well when we're talking finances. Silver voice in the land of silliness is Phillip Statler from Statler Financial Services, who's on the phone this morning. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well for this. Hey, the first day of August.
Yeah, and boy, oh boy, what a mood change between the end of July and the beginning of August. We've had pretty much solid good news this week, economically and otherwise. Now we get to the 1st of August, and we've got unemployment news that isn't what we had in mind. We've got tariff news that isn't what the market wanted. Start out by backing up to yesterday. We started out all right for the day with all the major indexes, but then starting about noon, all of a sudden we kind of said, oh, we don't like this very much at all. Dow ended up down about 330 points. The Standard & Poor's 500 down 23.5. NASDAQ down by 7.5. Just once everybody realized that August 1st was coming and we had tariff deadlines and a few announcements coming out of the administration, just kind of all the wind fell out of the sails yesterday, didn't it?
Yeah, it really did. And, under the in worst case scenario, the Russell 2000 was down almost 1% yesterday.
Ouch. Well, and it makes some sense. Tariff sensitivities, tax sensitivities on smaller cap stocks, it, I suppose, makes some sense. Like I said, a pretty strong morning, but the S&P actually got back up above the 6,400 mark for a little while after Facebook's report. We did have one closing, one after the market closed. It was a big one. That was kind of a surprise, too. We'll talk about that in a minute. But we start out our morning with the jobs picture. And this federal jobs picture from the government data dump looks like ADP did last month. We expected 109,000 new jobs added to the nation last month. So what do we come in with? 73,000. That looks like the ADP number did a couple of months ago, doesn't it?
Yeah, it does. So that was definitely not what was expected. And when that hit the board, I will tell you, within the next 2 or 3 minutes, the futures really started to tank. I mean, they were already in the red, don't get me wrong, but that added some fuel to the fire.
Oh, believe it. The only good news that came out of it is the unemployment rate itself, that fictitious unemployment rate, came in as expected. They expected it to go up from 4.1 to 4.2%, and the official unemployment rate is 4.2% now. We are getting that indication that the labor market, okay, it's stabilizing and shrinking by a little bit, not to the point of catastrophic, but at the very least, it's definitely a tighter labor market than it was during the halcyon days a year or two ago, isn't it?
It is. And so we, let's face it, as the economy starts to slow down, there's going to be, less and less jobs created because of that. And I know we keep saying that tariffs haven't really affected us yet, but I think in the underlying current, they really are affecting us in terms of jobs and outlook and that type of stuff. Even though we're seeing numbers that don't say that, I think we're feeling it. We just don't want to say it.
I expect you're right. I mean, the hard numbers that we're getting in saying the tariffs aren't hurting inflation measurably yet. The tariffs are bringing in some additional revenue. So far, President Trump's got something to crow about, but there's no doubt whatsoever they're giving us a case of the jitters, and that was seen yesterday when the market noticed what the day the next day was. It is that trade deadline. It's arrived, and yesterday President Trump slapped a 35% tariff on Canadian imports, and then just under the wire yesterday, he did extend the deal with Mexico another 90 days and got a deal with South Korea. But then at the same time, we're whacking the heck out of a bunch of other regulars like Canada, Brazil, and a bunch of other tariffs on other countries. It's not even the fact that it's doing it. it's the jitters as to what it could do that seems to be scaring all of the traders out there.
Yeah, because it can happen overnight, right? Hey,
Yeah.
just wake up to the morning and say, "Oh, I just added this tariff." So yeah, that really brings some uncertainty to the
Well,
markets.
yeah, and the other side of it as well is President Trump is in court defending his tariff policy. There's a legitimate judicial argument as to whether or not President Trump can declare an economic emergency and unilaterally impose tariffs. Presumably, that stuff gets passed by Congress. And word out of the courtroom yesterday, anyway, was while they were arguing this case, the judge, according to some observers anyway, seemed a little skeptical that the president was within his powers as the executive authority to do that. So if you don't like tariffs, well, you got a bunch more, so you're unhappy. If you do like tariffs, well, there's a possibility that the entire thing might just blow up in President Trump's face and he'll lose them all. Nobody's happy this morning on August 1st, are they?
No, they're not. And let's face it, I don't know what court we're in, but I'm sure we're not in the Supreme Court yet. And so,
No.
no matter what the court says, it won't be done. It will get appealed to the higher court until it reaches the Supreme Court, and then it will be handed out. And by then, Dave, he may not be president.
You're starting to sound almost as cynical as I am. Get on to some good news in the process. I had a couple of reports yesterday that came out. One was good news and everybody was happy. The other one was relatively good news and nobody was happy. How did Apple report?
Apple did well. They grew their iPhone sales by 13% year over year, which is good news. And they saw their overall revenue growth up 10% year over year. So that's really some good news for Apple. And so we're looking at some things there. Now, they are still lagging behind in their AI technology. But Tim Cook said the other day on his earnings call that, hey, look, we're not opposed to buying, technology. And so they're continuing to look for companies that can help them by acquiring them to help them build their AI faster. So that was some good news coming out of there as well. They beat on earnings.
I was going to say, I also understand that they had a little bit of a sales turnaround to the positive side in China as well. Some of their strategy there is helping, and that made investors happy.
I'm sure. I did not see China directly mentioned. Oh yeah, up 4%. There it is, a little blurb there. But they beat on earnings by, I don't know, they came in at $1.57 versus $1.43. Revenue better than expected by about $5 billion. iPhone sales, that was a big number. It was up $4 billion from what was expected. So
that's good. They were not expected to have really good sales numbers for the iPhone, so I saw that top line one. And, okay, all those giveaways they're doing through the cell phone companies for a new activation has done some good.
The only place I see them really failing is their iPad revenue was off from what was expected.
And that almost, well, especially I'd imagine since the rumors have gotten out that next year's iPhone will include a foldable model that'll basically completely destroy the iPad, I'm assuming.
Well, it depends on how big you need to see stuff. For us visually impaired people, we like bigger. We want to watch stuff. So, and they increase their gross margins too, Dave. That's a big deal for a company like this, by about 0.6%. So that was some good news for them as well. So we see Apple this morning trading up about 1.8%.
That's good to hear. They're a long way away from their all-time high, so I know they're happy to see that. The other side of the fence was Amazon beat their numbers, and everybody talks about Amazon being a big retailer. Everybody forgets the fact they're also one of the biggest cloud storage companies, and investors decided to pay attention to that this time instead of the rest of Amazon, I gather.
Yeah, they had a disappointing forecast across the board. Their operating income, they've shifted that, and so that's got people a little unhappy, Dave. They're down, I should say, a little. They're down 7.75% right
that borders on monstrous. Like I said, the sales numbers looked all right. The report looked all right, but I heard their cloud service projections and guidance were nowhere near what they were expecting. So we're 1-1 so far. I need to make mention that one of the big ones that came out earlier in the week is all of a sudden now a member of the $4 trillion club. Microsoft is now all of a sudden a $4 trillion market cap company, which that's almost becoming a nothing burger these days. We got so many of the high tech companies becoming $4 trillion companies, right?
Yeah, that's right. It's becoming, until we see a big downturn in the market, we more and more people, more and more companies are approaching that.
Absolutely.
On my earnings list, I've got two.
Yeah.
I got two oil companies, Exxon and Chevron. Looking at Exxon, they beat by about 10 cents a share, $1.64 revenue ahead of expectations. Let's compare that to Chevron. Chevron beat by 7 cents a share when it came to earnings per share, revenue up by about $1 billion. More than expected. So good news there. They completed some acquisitions of Hess, which they've been working on for a little while. So let's see how the stock price is doing now. So we've got Chevron's up about 0.6%, and Exxon Mobil is up about almost 1%. So both oil companies doing well. So some good news on that front too.
I'm glad to hear it. Tidbits. The only other tidbit I've got, get back onto the high tech topic. This one just makes me giggle. China has cited NVIDIA over backdoor safety risks in their H20 chips. This just is proof positive. The world has turned completely upside down. China is concerned about data security.
Because they can't get in or what?
Yeah, go bang your head against the wall on that one for a minute. Resetting the table after a strong start. We fell off the edge of the earth yesterday, everything being relative, and it doesn't look like much better this morning. 45 minutes before we start trading, what are we looking at, sir?
We've got a lot of red ink this morning, Dave. The Dow down 0.75%. That's $332 on the futures. The S&P 500 down almost 0.9%. NASDAQ 100 down almost 1.1%. Throw the Russell 2000 in there, Dave. The small caps, they're down almost 1.8%. So a lot of red ink as we get started. Hey, silver, though, is bouncing back from yesterday's clobbering. They're up about 0.8% to 37, back over $37 an ounce. Gold is up 1.33% to $33.94 an ounce. And then crude oil's flat right now at $69.29 a barrel.
All righty. I get the bad news overseas. Chinese markets were almost uniformly off as we started turning our attention to tariffs again. Most of the indexes down the better part of 0.2% or better. Europe is even worse as we start talking about tariffs. They don't like that one tiny little bit. The median European index down by about 1.4% halfway through their trading day. We got to get off the tariff bandwagon and start talking good news on earnings before those other markets are going to improve. Getting my retirement together? Well, I got to plan it, and dreams don't work. How do I turn my dreams into plans with you, Phillip?
Dave, through our core retirement design, we help people design the retirement they always dreamed of. And that's why we offer a 30-minute, no obligation phone call just to see if we can be of any help, to answer questions folks may have about their retirement and whether or not they're on the right track to get there. So give us a call at 863-382-0037 to schedule your 30-minute, no obligation phone call. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And back here again next week with day-to-day details as to what's affecting your money each day here on Light FM. Have a marvelous weekend, sir. We'll catch you next week, all right?
All right, man. You have a great weekend.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Folks, again, I want to thank you for joining us today. Have a great weekend. I look forward to speaking to you again next week. Until then, Have a great weekend. Bye now.